Hi everyone, let's go over my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the macro bullish scenario where we're looking at a finished wave 1, finished wave 2 for now a bigger wave 3 to the upside, where usually a wave 3 is the strongest wave where you want to see price moving parabolic towards the upside, and you also want to see volume moving to the upside as well. Now in this scenario you can see that the low of wave 2 has been made just above the 0.5 Fibonacci, with all the fibs taken from the low to the all-time high. Most commonly, a wave 2 is retracing between the 0.5 and the 0.786, and you can see it actually just missed out on that common target. But also, the low of this wave 2 has been made before the 0.382 fib time, also taken from the low to the all-time high. And usually, corrective structures correcting the previous impulse are ending after the 0.382. So then you would expect something like this to happen, for example, because a correction that is ending before the 0.382 is very rare. Now, if we are looking for a wave 3 to the upside, as mentioned, you want to see a big impulse structure. It should be the strongest wave, right? In an impulsive structure where you have a 1, 3, and a 5, wave 3 most commonly is the strongest wave. So let's compare the beginning of this wave 3 with previous impulses to the upside, a wave 1 and the beginning from the COVID low into this bigger wave 3. And that's what these bar patterns are for. So if we put this right bar pattern, which comes from the COVID low, as you can see over here, and we put it on top of price, something important to mention is I did not edit the size of these bar patterns. So it's a direct copy from the low to wherever I took it over here. And I didn't change it in size to make it look less impulsive or more impulsive. But what you can see is price over here is lacking behind the impulsivity that we had of this move to the upside. And that's not really something you like to see. You can see price initially went to the upside quite okayish, but has been ranging for a while. And that is the same problem that we see with this bars pattern over here, which is a copy from this piece of the chart. You can see it's almost like, it's a 1-to-1. I didn't change the size. And if I then put it on the low of this wave 2, then you can see initially we had a good start to the upside, but now we've been ranging sideways for a very long time, and we are not really as impulsive as this move was to the upside as well, which lowers the probabilities a little bit of this being a wave 3. Now, can this then be a wave 5 and then a wave 1, 2, 3, 4, 5? So let's quickly put that on the chart, because that's the question mark, right? If this is like lower probability of being a wave 3, then could it be a wave 5? Meaning we do something like this, 1, 2, 3, 4, and eventually a wave 5. Where for a wave 4, you want price retracing to the 0.5, which also happened. If you take a fib from the low of 2 to the high of 3, move it to the right, you can see the 0.5 has been nicely respected, which is a maximum target for a wave 4. So that's all nice, all good. However, in a wave 5, what you want to see is a new high being made, preferably in the same price and time relationship as wave 1. Usually, if wave 3 is extended, which is the case in this impulsive structure, wave 5 and wave 1 have a price and time relationship of about a 1-to-1 relationship. So a 1-to-1 in the length of price and a 1-to-1 in the length of time as well. But time over here, as well as price, by the way, is a bit of a problem, because we are not even close to the all-time high, as you can clearly see. But time-wise, we already passed the 1-to-1, meaning this move from the low at 15.4K to where we are now is already longer than this yellow wave 1 to the upside, which I can show you like this. So the 1-to-1 in white, that is the length in time from the low of 15.4K to this 1-to-1, the 5th of June on the weekly chart, which is the same time as from this low to the high of wave 1. Now clearly, we are not even close to the all-time high around the 1-to-1. Then the next relationship between a wave 1 and a wave 5 is the 1.618. But you can see that the 1.618 is approaching very quickly on the weekly time frame. It's the 2nd of October, and we are not even close to the all-time high. So this being a wave 5 at the moment has very low probabilities, which is also usually the reason I'm not really covering that scenario. But I prefer to cover this wave 3, as at the moment it's still the best probability for the bullish scenario, but it doesn't look too great at the moment. Now, if we look at the bearish scenario, then we're also looking at the same impulse over here, 1, 2, 3, 4, 5, which then is the end. But we are now looking at a bigger corrective structure in a 3-wave pattern to the downside, like an ABC. In this particular scenario, we are now inside of this B wave over here, where we are looking for a 3-wave structure to the upside, and then a wave A, a 5-wave move, followed by a 3-wave corrective structure before then another 5-wave move to the upside. You can see that price has been rejecting very nicely over here inside of this white box, which used to be a support and is now flipping into resistance, which is exactly what you want to see for a support resistance flip and a potential support resistance trade. Now the target of wave B, that's something we talk about in the daily update section, that is somewhere around here, for then a bounce to the upside for wave C, where the golden pocket and the 786 taken from the all-time high to the low of A are very important targets. The golden pocket is in confluence with this point of control of this whole high time frame range, which is a very important level indeed at around 39k, and the 786 sitting at about 50k is in confluence with the value area high. So if price can actually manage to enter this value area over here and get above the value area low, maybe have a retest before then continuation, the point of control is the first target, the value area high is the second target. So this is a very, very important resistance for price between 39k and 50k. And if we then look to the downside after B would then be in, the yellow B that is, we're looking for a wave C to the downside. And if we take a fib from the low to the all-time high, then the golden pocket over here is in confluence beautifully with the value area high of this very big multi-year volume profile, which is incredible support for Bitcoin between basically 11k and 8k, because the target area for C, if price would retrace to the 786, you take a trend-based fib from the high to the low of A to the high of this wave B around the 786, then the most common target area for C is between the 1 and the 1.236, which is a very nice confluence with the golden pocket and with the value area high. So this is incredible support for Bitcoin. If we then zoom in to this structure over here and look at the bullish and the bearish scenario, I go to the daily time frame, go to the linear scale as well, and not the log scale that we are on the weekly time frame, and you can see I have a green count and a purple count, and there's a big reason for this. So first of all, this move to the upside counted as a wave A or a wave 1. So we have a 5-wave structure to the upside. Now I have seen counts where people put wave 1 or a wave A over here. But from an Elliott Wave perspective, I'd like to shortly explain why the probabilities are low that this high over here is the end of an impulse to the upside, and this is potentially an impulse, like a much bigger impulsive structure to the downside for new lows. And it mainly has to do with the sub-degree count of this structure, because people putting the wave A or wave 1 over here likely count the impulse as a 1, 2, 3, 4 and a wave 5, right? And from a first perspective, it makes sense. And it's all about probability. So it's not that it's impossible, it's just a lower probability count. And I want to take some time to explain it. So the problem here is this wave 2. And that is where it starts, because in this wave 2, we are now thinking about an expanding flat pattern, which is then a 3, 3, 5. The problem here is wave B, because this has to be a 3-wave structure, but it is clearly also on the lower time frames an impulse, which means that this cannot be a wave B, and therefore wave 1 has to move to the right side, because the move to the downside here can be counted as a corrective structure in a double zigzag, which is very nice for a wave 2, as zigzags are very common, and a double zigzag in a wave 2 is fine. So now we have a 3-wave structure, but now we get the next problem, which now is that the high of wave 1 has overlap with the low of this wave 4, which is not allowed in an impulsive structure. So now wave 1 and wave 4 create a problem. Can we have overlap in an impulsive structure? Well, only if we think about diagonals. And if we look at a diagonal and we take a channel from the high of 1 to the high of wave 3 to the low of 2, then what you want to see is the low of 4 being made before it hits the lower edge of the channel. But you can see wave 4 past the channel. And then we have to, out of nowhere, think about expanding structure, so an expanding diagonal, which is extremely rare, and also in an expanding diagonal, this wave 5 has to go much higher preferably. So this has also low probabilities. Besides, if we look at this wave 3, how does one count this nicely? I have seen counts where this is then a wave 1, right, 2, 3, 4, 5. But then again, there's overlap between the high of 1 and the lows of 4, which is not allowed in an impulsive structure to the upside. So it makes much more sense that this is a higher degree structure and not part of a wave 3, like from the low to the high, one impulse, where also if this is a wave 4, where's your wave 2? If this is not wave 2 because wave 1 overlaps with 4, where's the wave 2, right? Time-wise, it doesn't match. This is a very big horizontal structure, but we don't have any other wave 2 structure over here. So that is the reason why, preferably, wave 1 over here ends over here, then we have 2, then we have this as a wave 3, because you can count as a subdegree count a 5-wave move to the upside over here. For then the blue wave 4, moving to the left, blue wave 5, to this high, which then ends an A and a 1. Now, in a very bearish scenario, you want this to be the high and see impulsive structures to the downside. But for an impulse to the downside, this high is not allowed to be taken. But it has been taken over here because these highs are higher than the one on the left. So that means that the probabilities are at the moment higher for this to be a complete corrective structure instead of a much more bearish structure to new lows as it stands, right? Based on the information that we have. And that brings us to the scenario that we have at the moment. So with the daily updates that I make, we are looking for a 3-wave structure to the downside and then an A, B, and a wave C, which then is an impulse to the downside, where the target for a wave 2, preferably, there it is again, between the 0.5 and the 0.786, taken from the low to the high over here of wave A or 1, which is then between 23.2k and 18.8k. That is very nice. Now, it has to be said, this area is also a common target area for a wave B. So it's not that the fibs decide if this is a wave 2 or a wave B. But time-wise, we can think about a potential wave B or a wave 2, because a wave 2 tends to be a bit shorter and a wave B tends to be a little bit longer as well. So if price ends in here and moves to the upside, the probabilities are still 50-50 for this to be a wave 3 or a wave C to the upside, because it depends on the impulsivity, the volume, how parabolic it is. A wave C tends to be a bit more lazy and takes more time. A wave 3 should be very powerful and like parabolic to the upside. So we have to be patient. But in a more bearish scenario, this 3-wave structure over here in an expanding flat is only the beginning. So then we have an ABC to the downside in a flat, which then results in a wave W. Then you get an X, and then you get a wave Y in a much longer corrective structure. And then you start to get close to the 2 fib time, and these fib times, by the way, are taken from the low to the high of A or 1 to compare the time of A or 1 with the time it takes to correct. And the longer we correct, the higher the probability is that we're in a wave B, because a wave 2 tends to be short, and short is like, 1-to-1, maybe the 1.618, but you don't really like to see it being too long in time, when a wave B can easily go 2, 3, or maybe sometimes even longer. So that is why this area over here is purple. Now the 1-to-1 in green is currently sitting on the 5th of September. The 2 over here is sitting on the 27th of January next year. And the 3 is on 19th of June 2024. So even if this structure to the downside is completed and eventually price, based on probabilities, has a higher probability of moving to the upside, the move to the upside is important. Is it a 3-wave structure? Is it a more complex structure? Well, then we have to think about a wave X. Do we start to get a big impulsive structure to the upside? Then there's a higher probability we continue, and we have to observe if it is a wave 3 of a wave C, and based on those probabilities, we can then estimate the targets as well. So if we then finally look at the probabilities of the different scenarios, then on the macro time frame in both cases, we are still looking for price to move to the upside at least a little bit more towards that 40 to 50k area. Because in a bullish scenario, you of course want to see continuation and eventually take the all-time high. And in a more bearish scenario, you're also looking for around 39 to 50k area. See what price does over here for then potentially a move back to the downside. And on the high time frame, if we then zoom in to what I've just shown you over here, then currently, based on what we see with the daily updates, we currently expect price to move at least a little bit further to the downside, move into the green target area that I have over here on the chart. And based on the reaction that we get over there with a potential bounce to the upside, which is what I write over here as well, depending on the bounce, we can then assess probabilities for continuation in a wave 3 or a C, or a bigger WXY corrective structure, still ending somewhere over here, likely, but then we have to start thinking about higher probabilities for a wave B because of time. I hope this video was educational. I hope it was helpful. I hope it was valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.